Opendoor stock exploded on Monday, jumping 17% during the regular session and adding another 3% in the after hours as anticipation builds for earnings after the bell on Tuesday. That kind of price action isn't just random noise, it's part of a bigger story that's been brewing for weeks. With retail interest climbing, shorts getting nervous, and now official confirmation that Opendoor has regained compliance with the Nasdaq, this is shaping up to be one of the most interesting setups we've seen for the stock in a long time. So, what's really behind the move? And what should investors be paying attention to as we head into Tuesday's trade and the all-important earnings report? Let's start with what just happened. Monday's surge came on strong volume, with bulls stepping in early and holding the line all session long. The stock closed at $2.46, marking a gain of 17% on the day, and added another few percent after the close, a clear sign that optimism is building ahead of earnings. This comes after a quieter week or so where the stock had cooled off following its massive gains 2 weeks prior. But now, it looks like momentum is re-entering the picture, and not without reason. Opendoor officially announced it has regained compliance with the Nasdaq minimum bid requirement. That means the stock has closed above $1 for 10 consecutive trading days, the technical threshold needed to avoid delisting. More importantly, the company's board responded by cancelling the proposed reverse stock split vote that had been scheduled for August 27th. That alone is a big deal. Reverse splits are almost always viewed negatively by retail traders. They're often associated with companies trying to artificially boost their share price while masking deeper operational challenges. So when Opendoor's board cancelled that vote, it sent a strong signal. They believe the stock can recover without resorting to financial engineering. It may also be a sign that the board is confident about the earnings numbers they are about to report. This helped set the tone for Monday's rally. And now, with the stock closing strong and pushing even higher after hours, the attention turns fully to what Tuesday will bring. With price now pushing up against that $2.25 to $2.50 range, Tuesday's session will be a real test of whether bulls can carry this momentum through to the earnings report or whether some of that excitement fades on profit-taking. But it's not just price action or news headlines that are at play. Under the surface, there are several important forces converging. Short interest remains elevated. Some data shows over 20% of the float is still sold short. That's a big number. And it means a lot of positions are underwater right now. If earnings come in better than expected, it wouldn't take much to force a wave of short covering. Combine that with returning retail interest, and you've got the perfect recipe for a squeeze. Not a GameStop-style squeeze necessarily, but a steady climb that can accelerate fast if volume piles in. Retail sentiment is clearly turning. Discussions on Reddit, StockTwits, and other trading communities are picking up again. And this time, it's not just about Opendoor being a meme stock. There's a growing narrative forming that this is a legitimate turnaround play. The housing market, while still challenged in some areas, is starting to stabilize. Rates are still high, but buyers are adapting. Inventory is low. That creates conditions where Opendoor's model, buying, fixing, and reselling homes, could start to gain some margin again. It's not all about flipping in hot markets anymore. It's about operational efficiency, geographic targeting, and transaction volume. And that's where the earnings report comes in. Expectations aren't sky high, which is actually a good thing. Wall Street isn't forecasting profitability, but they'll be watching closely for any signs that margins are improving, that unit economics are stabilizing, and that Opendoor is doing more with less. If they can post a narrower-than-expected loss or show improving contribution margins, that may be enough to spark further upside. Especially when you remember that so many people are short the stock and that the company has removed one of its biggest overhangs by cancelling the reverse split. Looking ahead to Tuesday's session, here's what to keep an eye on. First, watch how the stock behaves in early pre-market trading. If it gaps up and holds, that tells you sentiment is still building. If it pulls back but finds support above the $2 level, that could also be a sign of healthy consolidation before earnings. The $2.25 to $2.50 range remains key resistance, and a clean break above that on volume could open the door to a move toward $3, especially if the earnings report provides a catalyst. When the numbers drop after the bell, there are a few critical things to look for. Contribution margin will be front and center. That figure helps determine how much value Opendoor is extracting from each home sale. Next, watch their cash burn and overall liquidity. Do they still have a strong runway ahead? Or are they tightening spending to preserve capital? Finally, listen for guidance, especially any forward-looking commentary about the housing market, regional trends, or demand signals they're seeing on the ground. Even small improvements can shift the narrative from survival to slow recovery. Options activity will also tell you a lot about trader positioning. If there's an influx of short-dated call buying ahead of earnings, that could signal retail traders are positioning for an upside surprise. That type of activity can also add fuel to the fire if the report beats expectations, as market makers scramble to hedge their positions by buying the underlying stock. But with all this said, it's important to remember that this remains a speculative setup. Opendoor is still a company in transition. It's been through a brutal 18 months, and it's operating in a sector that's highly sensitive to macroeconomic conditions. If the earnings report comes in weak, or if guidance is overly cautious, there's a very real risk that the stock could fall back towards support levels quickly. That's why risk management matters here, and why traders need to be honest with themselves about what they're expecting and what they're willing to tolerate. So where does that leave us heading into Tuesday? The picture is clear, momentum is back, sentiment is turning, and the technical setup is leaning bullish, but everything hinges on what comes out of that earnings report. A beat or even a slight surprise to the upside could push the stock significantly higher. But a miss? That could derail things in a hurry. Either way, Tuesday is set up to be a defining moment for Opendoor. If it can deliver, we may be looking at the beginning of a bigger move. If not, it might just be another fade in a long line of false starts. But the pieces are on the board now, and the next move belongs to Opendoor. Thanks for watching. If you're trading this one, stay sharp, watch the levels, and pay attention to the reaction once the numbers drop. And as always, like and subscribe if you want to stay on top of what's next. Let's see what Tuesday brings.